to Property Pros, where we are making sense of the property world. I am Jacque Elias, Director and CEO of Futurebound, and I have here today Murray Thompson. He is the owner of SuperSure. Welcome.
Thank you, Jackie.
So let us know a little bit about insurance advisors and how do they fit into the property world?
Well, insurance advisors tend to deal with a number of major insurance companies, not just one, which means that they can obtain the most competitive quotes and the most competitive benefits for clients. With the purchase of a property, obviously it's a major purchase, so it's important to have that property insured to protect you from things like earthquakes and fires and floods and so forth. So that's what we provide to clients, and we do that as simply as possible.
Right, because I know someone said that you really don't need a good insurance until you need insurance, right? Like, so people don't really think about the need for insurance until they have a need, right? So it's more of a protection and a prevention, but it's more than just property, isn't it?
Yes, well, when people purchase a property, they obviously, most of them have to obtain a loan from the bank, say, to purchase that property. So one of the other types of insurances we look at is mortgage protection insurance. So if something happens to that person, if they pass away or they get sick, that loan is either paid off, or if they get sick and unable to earn an income, that the mortgage is paid for by the mortgage, what they call mortgage protection insurance. So those things need to be considered along with life insurance should something happen that the loan is also paid off.
And does that get covered under, so would you get mortgage insurance and income protection, or is it a type of income protection?
Well, mortgage protection insurance is a type of income protection in that it pays the mortgage should you be unable to work. Income protection insurance will pay an income so you can continue to pay the bills, and so that is separate from mortgage protection insurance.
Right, so when someone comes to see you as an insurance advisor, then you are then giving the advice as to what type of insurance is based on their specific situation, right? Whereas if somebody just goes to an insurer, they will do the same thing, but it's obviously just for their products. Is that right? And so you're looking at multiple insurers and what might be the best product for them.
Yes, we do what they call a full needs analysis for people so that they can clearly see all the options, and then they can choose the options that are important to them, and of course affordable and within their budget.
Right, that's pretty good. Because I find, especially now when we're in an economic downturn, a lot of these type of situations are coming up of, oh my goodness, maybe we need to look at, do we have the right insurances? Do we have the income protection? People losing jobs and things. And so I think that's really important work that you do for particular times like this. Is it too late to look into changing your insurance? Is there ever a time where, it's too late to actually do that?
Well, the earlier you do it, of course, the better, because insurance relates to your health. And if your health changes at any time, then insurance companies may not offer you that cover. So the earlier the better, because you never know what's around the corner. So health-wise, it's better to get the insurance in place as soon as you can, and of course insurance that is affordable for them.
Right. And viewers might be thinking, oh, that's great, Jacque and Murray, getting all this insurance and just in case something happens. But what about the cost? You know, is this going to be so expensive and make it worth my while? You know, what's the cost that people have to pay when they use an insurance advisor, and then, you know, the kind of cost maybe to insure their house and contents and mortgage protection and those kinds of things?
Yes, well, the cost to use an insurance advisor is free to a client. We get paid a commission by the insurance company, so that's how we earn our revenue. The different types of policies, we break it all down for clients so they can see the cost for each type of insurance. And then they can make a decision from that breakdown as to what is important to them and what they can afford.
So really having solutions for any budget.
That's correct.
Right, so that's awesome.
Yes.
And so what tips might you give, let's say, first home buyers? Because I know a lot of first home buyers, I know you're out there, and just really, there's a lot to understand. Lots happening, it's really daunting. What advice would you give first home buyers going through this process?
Well, you can reduce your costs with house insurance by having a higher excess on your house. For example, instead of having, say, a $500 excess, you could have a $1,250 excess, which will reduce the cost to insure that property. So that is one tip that you can look at. And the other types of insurances, there are different benefits you can have with those other types of insurances, like life insurance, income protection, mortgage protection insurance. So if you reduce your benefits under those types of insurances, you can also reduce your costs. So it's my job is to give you a full picture of everything, a full breakdown, and then you can make a informed decision from there.
Right, and make adjustments as you go, right? So you
Yes.
can, you know, maybe your need for insurance earlier on is one level, but then there might be a change in your circumstance and you can adjust it. So just making the right decision for your situation at that point, and then having some reviews along the way.
Yes,
Yeah.
yes. Well, there's lots of costs involved in buying a house, let alone looking at insurance. So we tend to add other things along the way as it becomes affordable for you.
Yeah. And what about property investors? They are purchasing property more than their owner occupied. Is there any tips for them so they're not making mistakes around their insurance?
Yes, well, with property investors, they can add to their insurance what they call landlord protection insurance. So it protects them from any malicious damage that tenants may occur with tenants. So it also protects loss of rent for their property. So that type of insurance they can add to their normal rental house insurance.
Right, that's awesome. Well, thank you so much, Murray, for your time today.
You're welcome,
You've given us
Jacque.
lots of information that's helpful, and we will be talking to other professionals in the property world to find out exactly what we should be thinking about and considering. Until then, we shall see you. Bye-bye. For more financial tips, advice, and education, like, follow, and subscribe.